Focus back on markets. Jai Bala of CashSecures.com joins us on the show. Hi Jai, you must be a happy man. You told us last time around, Nigel, this rally that we're seeing is going to get sold into and we're going to test lower levels. How low can we go? What are the levels you're looking at?
Hi Nigel, good to be here. Thanks for the acknowledgement. Now, see, the market is doing what is anticipated of it, and I still hold the view that what I said on October 1st, that this market is correcting at least to the June 4th low of about 21,830. So that remains unchanged. But what happens at the intermediate levels? Where are the intermediate stops? That's the only question. So as I pointed out last time, the 23,816 support that it took last week, if that were to go, the next support comes at about 23,650. And below that, it's 23,100. So I don't anticipate at this leg. I mean, in this leg, the market to drop straight to 23,000. I anticipated some bounce to come through from 23,600 and change. But if the market were to break below 23,600 and change, it signifies that the markets are more weaker than I'm anticipating. So we want to see some bounce come through. And I think I'm anticipating some bounce that's sizable than what we saw from 23,816 to 24,500 and change. Maybe the next bounce could be slightly larger than that, but the market remains sell on rise.
Also, Jai, hi, good afternoon. So you're saying that you will sell even that counter trend rally, which you are expecting can happen. Then what? I mean, what are the levels below 23,800 that you would perhaps even track? When a lot of people are talking about the test of the 200 DMA. So how are you sort of going to play along with this?
Yeah, the theme remains sell on rise until markets find support at significant levels, but that's still not happening. There is structural breakdown for leading indices that were leading the bull market, and capital goods index is at an important support. The Nifty NSE 500, the Nifty 500 stocks are at a very important support for a long-term trend line from 2020. And if it were to close below 100 points below current levels, that will be the breach of a trend line. So that will signify a long-term breach and the breadth deterioration for the market. And so, the strategy remains sell on rise. As I pointed out last time, Nifty Bank probably is going to be, the leader on the way down this time. And if Nifty Bank were to break below 50,380, that will be a breakdown from a head and shoulder stop. And that will lead to a fall somewhere close to about 45,000, maybe a little more lower.
Jay, hi. Again, congratulations on getting that call right. The dollar, Jay, if you can weigh in, it's a sharp move and a relentless one. From this morning, 8 o'clock, we've had another third of a percent move higher, closer to 106 now, the dollar index. What's your sense?
Yeah, 106.119 is an important resistance. If that gets taken out, we are likely to see much bigger levels to come through. I've upgraded my price objective for the dollar to at least 109.5. So, I had earlier projected about 106.5. Now I'm upgrading that to 109 and change. Along with the dollar, the yields are also rising. The most important thing that's happening for the market is that, if you look at the U.S. Consumer price inflation and compare it, the 2020s consumer price inflation with the 1970s consumer price inflation, it's been moving lockstep. Unfortunately, I don't have a chart to present in front of you for the viewers, but Arthur Burns, the Federal Reserve Chairman in 1970s, did a similar thing, cutting rates from 13% to somewhere close to 5.5% when the inflation had risen up to about 10%, which is similar to what the user consumer inflation rose up in 2022, and now it's dropped to manageable levels about 2.5 and change. The Federal Reserve is very possibly committing a policy mistake by cutting interest rates. We're going to see a resurgence of inflation come back. That's what the dollar index, the yields are actually pointing out to. This is regardless of Trump implements his policy of tariff rate cuts, because I'm seeing Brent crude drop to just below the September low by 65 and bottom out and begin a move somewhere close to $100. So regardless of what Trump does, Brent itself is going to bring in a lot of inflation.
My, $100 on Brent. Wow. I guess, but that's what markets do. They surprise you when you don't quite see the immediate future. It's always in the distance. That's an interesting call. Jai, stay on. We have to take a break. We want to come back and discuss some more individual stocks with you, some more trades that one can perhaps look at. Back with that.
Jay, coming back to you, going by the way you're looking at the market, I'm guessing if I ask you for stock calls, it probably could be on the short side. Give us your ideas.
Yeah, I have two calls for today, Nigel. One is Glenmark. Glenmark is breaking down from a head and shoulders top, and the stop loss is about 1777. The neckline break happened today, and the price objective works out to about 1400. It could do a little more. For the first time since 2020, I'm turning bearish on the pharma sector. So that's probably a trend change there for the whole sector. And the second call is on the banking index. PNB, the recent bounce from the October 25th low, looking like a corrective bounce. Hence, the high of 108 should be used as a stop loss, as unlikely to get taken out. So, price objective of 92 for PNB. Canada Bank also looking pretty similar. You can use the high of 2-3 days back and expect it to break below the low of October 25th.
Now, the fall is quite a big one, you'd have to say, 280 points down. And again, it's one of those days where buyers are simply not emerging. They're unable to withstand the onslaught of the selling pressure that's coming through. Look at that. I mean, it's just low after low after low. That's the kind of day that we've been in the midst of. And remember, the lowest point of our consolidation, this about 700-point consolidation that we've been in the midst of, it's 23,816. And we're practically there now. Just very quickly, Jay, are there any places to hide, any counter uptrend rallies that you'll trade on the upside, or anything that relatively looks stronger within the Indian market?
I'm watching a couple of names, Surbi, but I'll wait for the market to produce a reversal. Bharat Electronics actually, broke out of an inverse head and shoulders pattern, and if it were the right environment, it should actually go to record highs. It should not break below 277. If it does that, it will negate the pattern. Likewise, I'm watching one more low to come through for sugar 11 futures, but that's actually a corrective decline. Once that happens, I'm anticipating sugar futures to rally to somewhere about 24 cents per pound. So that will probably bring in a rally for the sugar stocks, but it's still got a little more downsides to work with. So these might be places to hide, but that will be just for the very short term. I don't think it's for the medium term.
Okay. Thanks for that, Jay. Good to get that